You just landed the most lucrative contract in your company history, but instead of celebrating, you are staring at a massive, terrifying cash flow gap. You have to buy raw materials, pay your expanding crew, and cover expensive logistics right now, but your newly acquired corporate client demands rigid payment terms of 30, 60, or even 90 days. Your hard-earned money is trapped inside an unpaid invoice, effectively punishing your business for its own outstanding success and halting your momentum. That trapped revenue does not have to sit idle in a ledger while your daily operations stall and your suppliers wait. Invoice factoring provides a highly effective direct mechanism to unlock that capital immediately, transforming static accounts receivable from a frustrating waiting game into a dynamic, active financial tool. Instead of taking on cumbersome new debt, you are simply selling your verified outstanding invoices to a specialized financial partner at a slight discount in exchange for immediate, usable cash today. To fully grasp the true strategic power of this financial maneuver, we must first define working capital simply as the liquid money available to meet your current short-term obligations and keep your business running smoothly every single day. When your working capital is locked inside a filing cabinet in the form of unpaid bills, your business simply cannot breathe or react to new opportunities. Releasing those trapped funds restores the vital financial oxygen your operations require to move forward aggressively. The core mechanics of this exchange are remarkably straightforward and highly efficient for fast-paced enterprises. Once you deliver your product or service and generate the final invoice, the factoring company advances you the vast bulk of that invoice value, typically between 80 and 90%, within a mere 24 hours. You get the vital cash you earned today, and the financial factor simply waits for your corporate client to pay the invoice on its originally scheduled due date. Qualifying for this specific type of business funding completely flips the traditional banking script and removes common barriers to entry. Because the factor relies entirely on the invoice being paid, they care far more about the sterling creditworthiness of your client than your own personal credit score or your limited time in business. If you are a young, ambitious company selling to an established, highly reliable corporation, your client's strong financial standing becomes your golden ticket to immediate, unrestricted funding. A persistent and damaging myth suggests that selling invoices is a desperate last resort measure reserved exclusively for failing or struggling enterprises. In stark reality, it is a proactive, highly strategic growth lever utilized continuously by some of the most aggressive and successful mid-sized companies in the global market. They recognize that waiting 60 days for cash is a massive, unacceptable opportunity cost, and paying a small fee to accelerate that timeline allows them to multiply their revenue exponentially and outpace competitors. With that accelerated capital securely in your bank account, your strategic operational options multiply instantly and dramatically. You can confidently meet a massive Friday payroll without losing sleep, purchase vital bulk inventory at a steep supplier discount, or aggressively bid on the next massive contract, knowing you possess the liquidity to execute flawlessly. The cash advance becomes a reliable, unshakable bridge, ensuring your upward growth trajectory is never derailed by the arbitrary, sluggish payment schedules of your largest corporate customers. Traditional bank lenders almost always demand collateral, which simply means a valuable physical asset you pledge to secure a loan, like commercial real estate or heavy machinery, that the lender can seize if you fail to pay. In the specialized world of factoring, the verified invoice itself serves as the underlying asset, completely eliminating the terrifying need to put your personal family home or vital production machinery on the line just to access the working capital you rightfully earned. This unique asset-based dynamic makes factoring fundamentally different from securing a standard line of credit or a traditional SBA loan. While those canonical financial products are excellent, foundational tools for long-term capital investments or broad operational padding, they often require extensive historical financial documentation, rigid banking covenants, and agonizingly lengthy approval processes. Factoring completely bypasses those institutional hurdles, offering a highly targeted, transactional approach to liquidity that scales perfectly and instantly in tandem with your fluctuating sales volume. When evaluating the true cost of any financial tool, you will frequently encounter APR, which simply stands for annual percentage rate, representing the total yearly cost of borrowing money including all interest and hidden fees. However, because factoring is an asset sale and not a traditional loan, it utilizes a simple discount rate rather than a compounding annual interest rate. You are paying a transparent, flat fee, usually between 1 and 5% of the invoice value, strictly for the premium service of early payment. Furthermore, you can intelligently structure these financial agreements to shield your business against catastrophic, unforeseen client defaults. Non-recourse factoring means the financial partner legally absorbs the total loss if your customer suddenly declares bankruptcy and cannot pay the outstanding invoice. While this highly secure specific structure carries a slightly higher initial fee, it provides absolute certainty, transferring the devastating credit risk entirely away from your fragile balance sheet and allowing you to operate with profound, uninterrupted peace of mind. The psychological shift that occurs internally when you secure this type of highly predictable cash flow is nothing short of transformative for a dedicated business owner. You immediately stop operating from a posture of defensive waiting and begin operating from a posture of aggressive, confident execution. The daily grinding anxiety of checking the mail for a delayed corporate check is permanently replaced by the absolute confidence of knowing exactly when your hard-earned revenue will hit your operating bank account. Examining the broader economic landscape, we clearly see massive multinational corporations increasingly extending their mandatory payment terms to 90 or even 120 days, strictly to protect their own bloated balance sheets. This prevailing macro trend brutally squeezes the hard-working middle-market suppliers and dedicated service providers who bear the heavy upfront costs of daily production. Adapting to this hostile environment requires extreme financial agility, and accelerating your receivables serves as the ultimate decisive equalizer against these corporate giants. Armed with this accelerated, guaranteed liquidity, you can actually use those frustratingly long corporate payment terms as a devastating competitive weapon in your industry. When bidding against slower rivals, you can comfortably offer massive clients the exact 90-day payment window they demand, fully knowing you will factor the invoice and get paid immediately anyway. You easily win the lucrative contract by accommodating their rigid corporate policies, but you seamlessly fund the entire operation on your own accelerated internal timeline. Because this streamlined process is a pure asset sale and emphatically not a loan, it uniquely protects your company's EBITDA, which simply means your earnings before interest, taxes, depreciation, and amortization, a critical metric used by investors to measure pure operational profitability. Factoring does not add toxic debt liabilities to your balance sheet or rack up suffocating, compounding interest expenses, keeping your financial ratios impeccably clean and highly attractive for future equity valuations, partnerships, or potential lucrative acquisitions. This pristine balance sheet protection creates a sharp, definitive contrast with a merchant cash advance, another canonical funding option that provides incredibly fast capital, but does so by aggressively taking a fixed daily percentage of your future unearned sales. While a cash advance pulls blindly from your future revenue stream, regardless of your actual profit margins, factoring is precisely, safely tied to tangible work you have already completed and billed, keeping your financial obligations strictly aligned with actual delivered value. For ambitious businesses navigating intense, predictable seasonal spikes, this precise financial alignment is not just helpful, it is an absolute operational necessity. If you manufacture consumer goods for the massive holiday rush or provide extensive landscaping services in the busy spring, your capital needs explode precisely when your cash reserves are historically lowest. Factoring scales automatically and perfectly with your surging seasonal invoices, providing massive temporary liquidity without leaving you saddled with permanent, crippling debt payments during your quiet, slow season. The modern, streamlined application process for accessing this liquidity has evolved into a remarkably seamless, frictionless digital experience. Instead of compiling endless months of historical tax returns and sitting through tedious, judgmental banking committee reviews, you can often connect your modern accounting software directly to the Factor's secure digital portal. Invoices are verified electronically in moments, approvals happen in mere hours, and the vital funds are wired directly into your operating account with unprecedented speed and minimal administrative friction. That initial vital capital infusion, once successfully secured, rapidly becomes the invisible humming engine driving your daily business operations. The previously established mechanics of selling an invoice quickly fade into the background, operating quietly and reliably as a standard financial utility. You no longer obsess over the minor discount rate. You only think about the massive pallets of raw materials you just purchased and the talented new staff you just hired to fulfill the next massive wave of incoming orders. You can even cleverly leverage this newfound abundant liquidity to generate internal savings that completely offset the minor cost of the initial factoring fee. By having immediate cash on hand, you can aggressively negotiate lucrative early payment discounts with your own dedicated suppliers. If your primary supplier offers a standard 2% discount for paying within 10 days, and your factoring fee is exactly 2%, the maneuver essentially pays for itself while vastly accelerating your overall operational tempo. Managing your crucial customer relationships also remains remarkably smooth, professional, and entirely intact in this modern, integrated financial ecosystem. Highly reputable factoring partners act as a seamless, invisible extension of your own internal billing department, handling all routine collections with utmost tact and polished corporate diplomacy. Your busy clients simply update a standard payment address, while you are permanently freed from the awkward, time-consuming burden of making aggressive collection calls to the very people you are desperately trying to impress. Ultimately, taking decisive control of your accounts receivable is about establishing total, uncompromising sovereignty over your own business timeline. You are firmly refusing to let the sluggish, slow-moving bureaucratic gears of other massive companies dictate your necessary speed of innovation and aggressive expansion. By brilliantly converting static paper invoices into kinetic financial energy, you build a highly resilient enterprise capable of absorbing sudden economic shocks and capitalizing on fleeting, lucrative market opportunities the exact moment they arise. The true mastery of modern business financing is never about haphazardly collecting a chaotic assortment of random loans. It is about deploying the exact right financial tool for the exact right operational moment. When you finally understand that an unpaid invoice is not a frustrating delayed reward, but a highly liquid asset waiting to be deployed, your entire perspective on sustainable growth shifts permanently. You permanently transition from a helpless victim of cash flow gaps into a master architect of continuous momentum. Brightside Capital is deeply dedicated to providing you with this exact, unparalleled level of financial clarity and strategic operational power. We continuously demystify the complex, often intimidating world of business financing so you can confidently navigate these critical choices with absolute precision and zero hesitation. Whether you are rapidly accelerating receivables, exploring canonical credit lines, or carefully structuring a comprehensive multi-year growth strategy, we remain your indispensable, trusted guide toward achieving long-term, sustainable prosperity and ultimate market dominance. The crucial next step in your entrepreneurial journey is discovering exactly which powerful financial tools perfectly align with your current operational needs and your ultimate long-term vision. If you want to see what your business qualifies for, complete the quick Brightside quiz. https://Brightside Capital IO Business Survey. It only takes 2 minutes, and it's a simple way to start reviewing your funding options.